Hello, everyone. This video is the last video associated with the Group 5 cumulative software problem, Albert and Allison Gator using ProConnect. I will assume you've already have the instructions, MindTap, which is the textbook, and Intuit ProConnect, where we will enter the information into the system. Now, first thing we're going to do is just like we've done from previous chapters, we'll click on the tax return. The last chapter we completed was chapter 7. So let's go ahead and copy that return. Now we have Gator chapter 7 copy. We're going to rename that. And we'll rename it to 8. Rename. Now let's go ahead and go into MindTap. It looks very short. There's going to be just one element we're going to be adding to the tax return. On October 14th, 2024, Allison purchased the building where her store is located, October 14th, 2024. She paid $400,000 for the building, which includes $100,000 for the land. Allison's store is the only business in the building. The depreciation of the store needs to be reflected on the Schedule C of the business. Okay, relatively easy to set up. I think we're going to look at the instructions. I read through the instructions quickly just before, and I don't think it's complete. It says here, to depreciate Allison's new building from the menu, enter the building into the system, into the software, and it gives you the detail on how to do that. They're just asking you to enter the building itself. And the textbook says that the total cost was $400,000, of which land was the land was valued at $100,000. Now, very true that the only depreciable element will be the building. So if we take 400,000 and we subtract the 100,000, then we get a building cost of 300,000. So that is what the instructions are saying we need to enter. And I looked at the solutions and that's what's expected. The instructions are totally ignoring the land itself. And if the property is ever sold in the future, then somebody's going to have to remember that there's a cost of $100,000 associated with the land. Or we can enter the land and it would be an item on the depreciation schedules as not depreciable. Just listed there in the event that building and the land are sold into the future. So I'm going to recommend we enter both. It will have no impact in terms of the dollar amounts. Will have no impact in terms of the dollar amounts that ultimately flow through to the Schedule C. But nevertheless, we'll do that. So let's start first with the building itself, and we'll follow the instructions. It says go to deductions and depreciation. So let's do that. We'll go to, well, first we'll go to input the return, and then we'll look for deductions and then depreciation. Now we have the entry screen that allows us to enter the detail here. Description of the property. We do have some flexibility with this. Let's see if they give us a hint on the instructions, how they would suggest. They didn't. Let's go look at the textbook to see if there's anything here. And the description of the property will be the store building. It could just put building, but this confirms that what we're really referring to is the building. It's going to say the form. What form is this going to be depreciated on? The form is the Schedule C, specifically the retail and auto accessory Schedule C. The category is going to be buildings. So we'll select that. The date placed in service appears to be October 14th, 2024. Let's enter that, 10/14/2024. The cost basis, now the total cost was 400,000, but the instructions given say of that 100,000 is associated with the land. So if you do some simple math, you'll see that 300,000 is associated with the building. $300,000 cost or basis, and that's what's going to be depreciated. This real property doesn't qualify for section 179. I don't think we've even really talked much about that. But what we're going to do is we're going to go ahead and go with the method. The method are some options here. Let's choose makers. And this is a commercial building. So we'll scroll down and look for the commercial building depreciation option. It appears non-residential real property. That would be code 87. Let's go look at the instructions to confirm that's what they asked us to do. Date, place, and service method is 87, right? So that's what we chose. We are good to go. Going back to the tax return. And I think we're pretty much done here for the building. I'm going to take it one step further. I'm going to suggest you do this, store land. Okay, this is associated, even though it's not going to be depreciated, it is going to be associated with the Schedule C. The activity is still associated with the retail store. This, however, this is not a building, this is land, and there is an actual option here called number 6 land. The purchase date is 10/14/2024. This is going to be the 100,000. So the $100,000 is what they valued the land to be. Point is, we have to identify it as land, no depreciation. So it will have no impact in terms of the dollar amount, but what I get concerned about is that at some time in the future, let's say 10 years from now, they're going to be selling the store building, and all that's going to be listed is that $300,000 less the accumulated depreciation which has been recognized over those 10 years. If someone forgets within that tax return, or if the taxpayer moves to another preparer and the new preparer receives a copy of what had been entered in prior years, it may just get lost. So this helps to ensure that when that building is sold in the future, we're going to identify both the building and the land to make sure, because that $100,000 is going to be appreciable. So that's going to carry forever. You may lose $100,000 of basis if you don't make sure it's entered into the tax system. All right, I think we got it. I think that's the only thing that needs to be done. So let's go ahead and review the return. And again, we're going to make this half the screen. Okay, so on the left side, we have software. And on the right side, we have the PDF solution. We'll go to the 1040. Just to make sure everything looks good, we'll look at the totals. I know that 1Z, no change. 2B, no change. 3B, no change. However, something's got to change here. 753.65, no change. Additional income 27,214. Oh, okay. It may have this did change, but it's exactly the same as the prior. That means we entered it correctly. So let's go to the bottom line, 1544,643, and then the bottom line on the next page is 5492. So we are good. The only since it was just one entry for depreciation, the only possible form this could be impacting is the Schedule C. Let's go ahead and click on the Schedule C on the left side. Let's scroll down until we get to the Schedule C on the right side. And so this should have a new entry here. Let's hope. I think we confirmed already that the numbers are correct. So depreciation, line 13, part 2, line 13, on the tax return, 1605, on the solutions, 1605. The bottom line, 13,289, 13,289. So that confirms it. Now, if I were you, if I were a student, I would actually, because this is going to be the last one. In fact, this is what you're going to be turning in as your comprehensive tax return. So if I were you, I would go through every single schedule, every single line item, make sure everything is correct, because that's what I'm going to be doing when I'm grading it. And if it's incorrect, then you do some problem solving, see if you can figure it out, try to get to the bottom of it. Certainly I'm available in terms of emails and or my office hours. We can take a look and see if we can figure out what might be a problem. But hopefully you've been doing it every chapter, and hopefully every chapter has been correct up until now. And so ultimately, you just needed to make this adjustment. Now at this time, we need to figure out how you're going to submit this. So let's go to the return. Okay, we already marked that we weren't going to e-file this. So the question is how do we print this return? Let's close this and go back to Gator. All right. Oh, there it is. Okay, so we'll click on File the Return. We'll print. We'll select Print to PDF. Select Print Complete Return. And now click Create PDF. Now I'm assuming everything worked because it immediately comes up. Will be Download Return PDF. So let's click on it. And now we have a PDF file that we have created. Now I'm unsure where that file was actually saved, if at all. So what we want to do now is download the file. You want to download it to a folder that you know where it's at. You're going to look for, I'm going to go ahead and just put it under downloads. It's going to be named Gator Chapter 8. Let's go ahead and rename it. We'll rename it to Gator Complete Tax Return through Chapter 8. Going to be listed. We're going to save it in the downloads, or I'm saving it under downloads. You can save it anywhere. This is where I would suggest you do that. Save to downloads. Go into Canvas. I'm going to change my view to student. I'll click on assignments. Scroll down to the ProConnect Cumulative Tax Return Software. There's the link. We'll click on this. Okay, so we could drag the file or choose the file upload. We don't have multiple screens open, so I'm going to go ahead and choose the file upload. I save that file under downloads. Here it is. I could select it and open it, and now that's going to be uploaded into Canvas. Now you can access it through assignments, or you can go to modules, and then in the very last module, when it's actually due, module 18, week 18, cumulative 5, group 5, cumulative software problem. You click on it and you have the same screen. Again, let's go here. We could click on downloads, again, select it and then open. Okay, that's how you'll submit it. All right. I hope the videos that I provided were helpful for you to complete the assignment. Hopefully this has been a pretty good learning process, and I wish you the best on your submission, and I look forward to looking at your assignment so that I can grade it.